Hello and welcome. I'm Matt Bullock, the head of portfolio construction and strategy for EMEA and APAC here at Janus Henderson. And I'm delighted to be joined by Mike Contopoulos, who is the head of multi-asset macro investing. So Mike, good to have you here.
Thanks for having me.
So Mike, you've been in London this week talking to clients about how you see the world from a multi-asset perspective. So what have been some of the key messages and in particular, what are the things to watch for the remainder of the year?
Yeah, I mean, obviously, Matt, probably the biggest thing is what's going on with AI and how should we think about that? Are we in a bubble? What should investors do? From our perspective, it's pretty clear. You need to be in the space, but be very conscious of what's going on and don't overweight it. There's tremendous opportunity outside of AI. And I think helping investors understand that opportunity and realizing that it's not just a technology story anymore. Yes, maybe in 2023 and 2024, the world was all about technology, and you had the concentration to prove it, of course. But over the last 18 or so months, you started to see real broadening. Earnings growth is broadening across the world, Europe, emerging markets, and even in non-tech US. And you saw that last year with Europe outperforming the US with no Mag 7. I mean, that's pretty amazing, right? And so I think the big topic has clearly been AI. And our view is, sure, but you've got to diversify. You've got to diversify away from technology into the rest of the world. The second thing I would say, central bank policy. What's going on with central bank policy? Is the Fed going to hike interest rates? What's the ECB going to do? Japan is reflating. How does this affect investments? What are you doing about it? That's probably the second thing that most investors want to know. And from our perspective, the end conclusion is underweight duration as rates go higher.
So with both of those, really, there's a common thread throughout all of that, which is really geopolitics. Yeah. And so geopolitics has been center stage. So it's a question that comes up a lot, which is how reactive should investors be to geopolitical instability versus sticking to longer term trends in a portfolio?
Yeah. So you can't be obtuse to geopolitics. You need to know what's going on, but you also don't want to be event driven. That's not what we do from the macro investing side of Janus Henderson. We focus on profit cycles, not what's going on from geopolitics. Now, to the extent that geopolitics affect profit cycles, then certainly you need to pay attention. But we're going to pick that up through, big macro measures, leading economic indicators, PMIs, things of that nature. What's going on with the inflation data? What are central banks doing to react to geopolitics? These are all inputs into our profit models, and profits, I think, matter more than geopolitics. When you buy a stock, you're buying a piece of a company, a piece of the earnings and cash flow and future growth of that company. So many investors have forgotten that in today's day and age. And I think that we have to remind people that although geopolitics are important, how we live our lives and what we talk about at the dinner table, when you're an investor, you're investing in companies, cash flow, and earnings. So that's what we'd rather pay attention to rather than one-off geopolitical events.
So Mike, with your role, you're sitting across a lot of different asset classes, which means that you get to see a lot of the opportunities as well that are out there. So right now, where are your highest conviction views? Where are you investing today?
Yeah, I sort of hinted towards this in my previous comments about broadening. I think you can almost be anywhere in the world other than in speculation, other than in concentrated markets, and do quite well. We quite like international markets in particular. We have a saying within our group, return on invested capital will always be greatest over long periods of time where capital is most scarce, not where it's most plentiful. Many studies suggest that in the US, only about 8% of a client's portfolios in international markets. Talk about scarcity of capital. Clearly, it's in the international space. And in the international space, you have growing earnings growth. So we think there's a huge underappreciated opportunity in international. And that in and of itself is broadening, because you've had so much concentration in US technology, communication services, and discretionary. It's all big one technology trade. I call it the tech complex. And so we think broadening, in particular, broadening to international markets will be really the best place to be, not only the next 6 to 12 months, potentially the next 6 to 10 years.
And so a final question, and now we're talking about longer term views here. And so how do you see macro multi-asset investing evolving as far as the problem it solves and also how clients use it?
Yeah, so I think there's always going to be a place for top-down, macro-driven portfolios, multi-asset, all equity, all fixed income, the whole gambit of it, right? And we obviously, try and do the best that we can for clients in constructing these portfolios. But I also think there is a growing and and bigger need for systematic and quant and thematic strategies is a diversifier to discretionary management of portfolios. Many of these strategies can take advantage of big secular themes to drive alpha. We think one of those themes that could be emerging is in European independence. Think about it as Europe basically needs to break away from the rest of the world and deliver investment in defense, in technology, in pharmaceuticals, in energy. These are big areas of growth that could prove huge opportunities going forward, and creating a systematic strategy around that could be something that's really interesting going forward. And systematic strategies in general, we think, could be a great way to diversify from manager discretion, and I think will be a bigger part of investing within a multi-asset portfolio going forward.
Great. Well, Mike, we're out of time, but thank you so much. We could talk for hours, I think, on the topic, because it is such a topical area. But thank you very much for your time, and most importantly, thank you very much to the audience for listening.